Can I get you to kick off with NVIDIA, what you're expecting from the company based on what we heard on the call last night?
Yeah, well, great to be with you. It's interesting. I went to bed last night and it was down 7%, and on this morning it's only down 1.5%. So, really what I think is, in general, the big picture on AI, we still think this is relatively early in the cycle, and the earnings numbers are really strong. And, you're seeing even other commentary from things like Salesforce this morning talking about this. So we can't forget that the stock was up 150% this year to date and just up 40% from that August 5th low. So, all in all, I think it's actually somewhat encouraging that investors are starting to step in here and take advantage of the weakness. Again, we don't recommend individual stocks, but again, from a broader markets perspective, seeing futures up and tech up is a positive sign.
I know you're taking a look at sort of this V-shaped market snapback. What does that indicate to you about what's to come this fall?
Yeah, well, when you have a corrective period like we had earlier in August, and you start to move up, one thing you want to see is broad participation. And over a 10-day period recently, we saw the advanced decline on the S&P over 2-to-1. Historically, when we see that 6 to 12 months later, markets tend to be up. So I think that's a good sign, is what you want to see, and it also reflects that broadening theme that we're seeing in the overall market.
We've had a lot of insight recently talking about the potential for small caps to do better, to really show some momentum now, given more participation, a broader rally and the like. What's your expectation for small caps versus large caps?
Yeah, so longer term, we still like large caps, partly because tech is a bigger part of large caps, and we still think the large cap tech story has legs. On a shorter term basis, I do think they are more interest rate sensitive, talking about small caps. So you probably see at least performance in line, or maybe a little bit better. But we're not at a point where we're upgrading small caps for a couple of reasons. They are cheap and they are interest rate sensitive, but the earning trends are much weaker relative to large caps. And they typically need to see a accelerating economy to outperform. In the environment we have now, we have a cooling economy. So all in all, maybe a little bit of a lift short term around the Fed. And I would say when we look at the data following the first rate cut, small caps have actually underperformed relative to large caps in general.
I mentioned the data that we're looking for today: jobless claims, real GDP, tomorrow, PCE, and then, of course, a jobs report of great import next week. Which to you could influence the strategy moving forward and what you recommend to your clients?
Yeah, well, we try not to be data dependent, so it's kind of the aggregate of data, the weight of the evidence. The most important data point, after this print from NVIDIA, I think, will be the jobs report. That will tell you more whether you're going 25 basis points or 75 basis points with the Fed in September. I don't think any of these individually change our strategy. If you had a much weaker employment report, say sub 100, I think that would be a negative for risk assets and a more positive for bonds, maybe longer duration bonds. But overall, not any one of these are going to necessarily change our strategy.